We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. I'm so excited to be back in the studio, the SMI studio.
50-year company.
50 years. Congratulations, SMI, on 50 years.
When was that, by the way?
I don't know. Today.
Was it? I saw that this morning.
I don't know. We were formed in 1976, and it's 2026. So I did the math. It's 50 years.
Somewhere in there.
I don't know what day.
Sometime this year.
Fair
play.
I'm Gabe Johansson here in the studio with Dane McKinney, Trevor Howard, and Mike Nuss with a fresh haircut from Clemente Porras.
Thank you, Clemente.
Looking sexy. He did your beard too?
Realize if I walk in there like a total bum, he'll do my beard as well. Yeah, and he didn't charge me extra, so thanks, Clemente.
Will he be your stylist too?
He's like my counselor.
We got to get you dialed.
Style?
We got to get you dialed in. Yeah.
He's probably the closest thing I got to a stylist if I would follow through.
Okay, Clemente, if you're listening, let's get Mike all dolled up. We got to find him a woman.
There you go.
You're looking good.
Looking out for me this spring. Appreciate it.
That's right. Okay, guys. So what are we going to talk about? Today we want to talk about, somebody asked us.
Chad asked us.
Oh, Chad asked us.
Now you're calling him out.
Chad Montgomery.
Chad loves him.
Wants to know the difference between money and wealth.
He wanted us to talk about the difference.
Yeah, I think Chad knows.
He knows the difference.
I think it was a trick question.
He thinks
for Trevor.
He thinks we don't know.
No. He thinks that people get misled in real estate and have a misconception and don't understand what the two mean, because you can have a lot of wealth or paper fake money.
Yeah.
But have no real money.
Is it fake?
It's all fake.
Isn't the real money the fake money?
Yes. So you
bigger piles of it.
You should teach him about that, actually, because he might not know about that.
Well,
tell the audience what you mean by that, Gabe.
Oh, why the paper money's fake?
Yes.
Oh, this is going to be a long conversation. Yes. I think Mike should teach us about the petrodollar and what happened in 1978 and
what happened in Weimar, Germany.
I mean, if we got to go all the way back to like the mid 1800s Civil War time.
Oh, we're going all the way back.
Now, you got to tell people why they don't want dollar bills. Because everyone's chasing dollar bills, but they don't want them.
There's a very simple answer. I'm a kindergartner, so here's what I think. It's a lot easier to print dollars than it is to print buildings or gold or other things, I guess, for that matter. A lot of people are into Bitcoin right now, silver, gold, all the other stuff. So you talk about assets, like cash on your balance sheet is an asset, but it's an asset that can be easily created. And the more dollars they create, the less they're worth. So I think personally that I want to store my wealth in hard assets. I don't understand the stock market, bond market, gold, silver, or crypto. But I understand real estate. And so I don't know. I think it's funny because people say, oh, I'm real estate poor. Well, what does that mean? Logan called me up 10 or 12 years ago, and he goes, this is really weird. I'm a multimillionaire on paper, but I'm still bumming cigarettes from people. It's back when he was still smoking cigarettes. That's how long I've known Logan. So there's sort of this weird thing. It's kind of like you'll hear people go like, well, why would I buy a deal if it doesn't cash flow? Because they just think about how much cash is it going to put in my pocket today or tomorrow or next month. And we talk about now money, tomorrow money all the time. That's a very simplistic way of looking at cash versus wealth, in my opinion. You have to have cash because that's just how we operate. Our businesses need it. Our lives need it. I don't know. I don't go to the grocery store and pay with Bitcoin or pull out little pieces of silver. It's just not, they're, like Mike says, they're a store of value, but what do they do? They don't, to me, the cash is the only thing that I can spend. So I want more of it, but how much of it do I actually want? And that's one of the things I learned early on in real estate when I was talking to investors is people who sat on too much cash almost had more urgency than people who had no cash. They're like, I have to do a deal because I'm sitting on too much cash. And they knew, if you need a couple of million or 10 million or whatever in the bank because of what your holdings are, what your businesses are, beyond what you need to operate your businesses in your life, beyond that, it's a waste because the dollars are being printed every day. I just saw a report today from Bar Chart that the M2 money supply today hit an all-time record. There's more money in circulation today than at any time in history. So the problem is, and Paul Curley taught us this, is we can't go out and print money, but the government can print money. The reason that our country can print money is because of the petrodollar. So the Iran war, the Strait of Hormuz, like this whole thing where gas is now $5 or $6 and you wonder like what is happening. Well, we took our dollar off the gold standard in 1971, correct? Like 4 or 5 years later, they struck a deal where all oil had to be traded in US dollars, which is the petrodollar. That allowed our government to be able to run deficit spending and be able to basically print money because it was backed by our economy, it was backed by our military, but it was also backed by this petrodollar. Everyone was trading in our currency. So the risk today, and Dane can talk about this a little bit, is you hear about Iran says, well, we'll let you come through the strait, but you got to buy the oil in Chinese yuan or you got to buy it in some other currency. As soon as somebody does a deal outside of the petrodollar and people catch wind that could happen, now it's going to be the beginning of World War III because we're going to obviously fight, I would imagine, over people using our currency. If other countries were not using our currency, the U.S. would not be able to do what the U.S. does, and we wouldn't be able to just print money out of thin air. I don't understand that, to be honest with you. Maybe Mike can explain that. What is the risk of other countries not using the U.S. dollar?
Well, part of it is if oil is traded in dollars or most things are traded in dollars, then other users of it, consumers, have to have dollars. So they have to buy our dollars. So that's part of it. So
that's one thing people don't usually think about is like you watch the stock market go up and down, you watch gold go up and down, you watch bonds go up and down, but your cash in your bank account is also going up or down, like as a currency trading against other currencies. But then we talk about inflation and how that dollar doesn't spend tomorrow what it'll buy today. And so we have to prop up the value of the dollar. And it's weird to watch it because they'll talk about like, oh, it looks like there's going to be a peace treaty in Iran, and then the dollar will drop. And then they'll say, oh, no, it looks like we're going to go bomb the hell out of them again, and the dollar will go up. It's like, it seems a little counterintuitive. But ultimately, I believe that this is not really about nuclear warheads. It's probably not even about oil. It's about resources and how we move those resources and what currencies we're using to move those resources. And if that ever comes to an end where the U.S. dollar is not the world reserve currency, the game is kind of over, isn't it? Like the U.S. can no longer deficit spend the way that we're spending. We can no longer print money the way we've printed money, or we will go into hyperinflation and our dollar won't be worth anything. So it's risky. Even though we need the cash, it's risky to have no cash and have all assets because it's very difficult for me to go buy groceries I can't walk in and show the clerk that I've got millions of dollars in equity in a property and walk out with my food. I have to walk in and hand them something. I have to give them my credit card or US dollars in order to walk out with the food, right? So you can't necessarily eat the equity. You want to have the equity. You want to build that wealth so that it's protecting. It's not only a growth strategy, but it's a preservation strategy to hold those assets. But you have to have enough cash to operate your business, and our banks won't even loan us money unless we have cash in the bank. They want to see that we have cash reserves. So I think personally, when people say they're real estate poor, like that's almost the way you want to be. Like you want to own the assets. You don't necessarily want to sit on a ton of cash because at least your money's working for you and it's preserved in those assets. Am I wrong, Trevor?
I think you want no dollars. You want to spend them all on real estate.
I love Trevor's quote when he said it's a myth that you can, what did you say about having too much cash? He said you can never have too much cash because you'll always find a deal you like better than having the cash in the bank. That's a Trevor comment. Most people don't think like you think, but it's true. We're not only generating wealth out of our real estate, but we're also preserving our wealth by holding the real estate.
Yeah, I mean, when you start thinking about having cash and like, what do you actually want? What does this all do for you? I keep coming to the conclusion that you just want more assets. But you want that to be cash flowing you, that spendable income, right? That you're getting monthly is the end goal on it. So you have both things working for you. Because if you have cash flow coming in from these assets and you're just spending that and you have a leftover from it, Like, that's the coolest part.
So why wouldn't somebody take, let's say I got $10 million in equity. Why wouldn't I just go sell all my real estate and just take $10 million and park it in my bank account?
Well, I mean, for the right person, maybe you would want to, and then just spin down on it over life and not worry about anything or do anything. Right?
But the risk is that in 10 years, 20 years, that 10 million
it's
is
worth
not,
less.
It's not 10 million anymore.
Yeah. So the problem isn't necessarily probably for the average person doing it with 10 million, is doing it with 1 million, because I think 1 million is a lot of dollars, and you sit on 1 million, and then you try to live off 1 million for the next 20 years. Like, you're gonna run.
Then you run out, and you're like, oh crap, I got to go buy assets.
Yeah, you have to have assets to hedge your risk, I think, because it's, as you print more dollars, it becomes worth less.
Yeah, cash is just a terrible way to store money, but we chase money so that way we can store it in something else. Like, the wealth is just stored money.
This is why Cardone, he's buying real estate assets, and then with each one, they're pairing it with Bitcoin, right? Like, between Robert Kiyosaki, Cardone, some of these guys that, are some of the leaders in financial education, they're all about Bitcoin, because Bitcoin, there's 21 million coins, 20 million of them have already been printed. They can't print anymore after 21, says the white paper. My argument to that is, well, they can just come up with Bitcoin Part 2, which they already have, and they have thousands of different cryptocurrencies that you can use. So, like, what that's all tied to, just the fact that it has scarcity to where you cannot make more of it. In the beginning, it was worth less than a penny, and now it's worth $66,000 today, right? So,
well, it's like gold, but it's easier to transfer.
Yeah.
Except Warren Buffett says it has no intrinsic value because it's a serial number on a computer screen.
Yeah, like gold has more.
The intrinsic value to Bitcoin is that it takes several $1,000s of electricity in order to make one of these coins, right?
Yeah. The biggest upside to Bitcoin is that no government is in control of it
Yet.
and it's easy to transfer. And so, like gold, you can't very easily transfer it because there's not like if you have
has
gold, a scale on you at all times.
Yeah, how do you turn it to money?
And
like, it takes time to go.
Yeah, and it doesn't break down into smaller fractions easily, right? If you have a plate of gold that's worth $5,000, how do you buy a McDouble? It's pretty tough. And so, but with Bitcoin, you have the ability to transact very simply in a modern world, similar to the way that you would with a credit card, but the currency doesn't because the whole purpose of the dollar, I mean, what's the value of a dollar? If Warren Buffett doesn't think there's value to Bitcoin, which obviously Warren Buffett's way smarter than me, so I'm not, but I'm saying, like, from the lens of the value of the dollar is just what we say the value of the dollar is, which we talk about all the time. The value of the dollar is what everybody agrees the value of a dollar is. There's no intrinsic value to a dollar bill.
But it's fiat currency, and the value of a dollar is based, in my opinion, on the U.S. economy and the U.S. military's ability to protect.
Right now, I think
economy.
it's just based on the power of our military. I mean, yeah, I guess obviously it's based on the economy itself.
Well, we're the largest consumer economy in the world.
Yeah.
So everybody, like Trump is saying, if you're going to shop, you're going to do business with America, you got to pay a tariff, that we get Liberation Day and all the other stuff. So, like, it's I feel like we're in a financial war. Like, I don't feel
I mean,
every war is a financial war.
Part of the reason that tariffs have to come into play.
Trade war?
No, every war is a financial war.
It's always about
world
money.
war has been a change of monetary policy or world denominated. Whatever our currency's traded in.
Yeah, the currency of the
changed
world.
in every world war.
The
Can
world
you go into
reserve
that a
currency.
little bit?
He's saying that every time there's a world war, the reserve currency changes
changed afterwards.
And so we just won the most recent one, thankfully, which made ours the reserve currency, and we haven't had one since. And we have actually continued to build our military so that we wouldn't have another world war, so that we could maintain the reserve currency status. And I mean, pair that with an extreme level of productivity beyond what any economy has ever had, the U.S. economy specifically. Like, our productivity in terms of innovation and what we've created since World War II is unparalleled. Like, no country has ever done it, obviously, because we have more technology than we've ever had before. And so that's been a huge part of the reason why we've maintained our status as the reserve currency. But even now, like, the dollar relative to the euro has gotten weaker and weaker over the past couple of years. Like, we're not winning in that regard, right? But we still have a really pretty strong medium of exchange. Like, people are hedging off of the US dollar, which doesn't matter to us, but that's because we're hedged into real estate. And that's the piece that would terrify me if I were holding a lot of dollars right now. Is my fear isn't that like my dollar went down by a little bit over some period of time. My fear would be that like hyperinflation actually started. Because right now we're in a position where I don't see, and I put out I put a LinkedIn post out about this, and it was probably a little long-winded, which is why it didn't get any likes. But the idea of the LinkedIn post was that like it's felt way too good for way too long, and I've said that over and over on the podcast. Like we can't maintain not hurting. Like, it has to hurt. The fear isn't that like your dollar's worth 5% less next year. It's gonna be worth 5% less next year. That's a non-negotiable. The fear is that it's worth 20% less next year. And then that in like 3 years, something happens with the world economy, something happens with AI, something happens that like some black swan event happens that happened in Weimar, Germany, which is why Paul always brought up Weimar, Germany. And I didn't, I had never deep dove it until last week when I was in Texas, because a guy that I was meeting with brought it up too. And I guess I had deep dove it before that. But anyways,
tell us about Weimar,
Germany was an extremely strong economy. Like, they had a really, really strong economy
100 years ago
in 1920. Yeah. Wow. And in 1920, they had to pay some people back for a little bit of stuff that went on in World War I. And all of a sudden they said, hey, we actually we can't make the payment that we're supposed to make to you. And Great Britain said, yeah, you can. And they said, no, like, seriously, we can't make the payment. They didn't believe them. So they went over to Weimar and basically just started taking their things. Like, instead of taking money, they started taking their resources. So it was like if somebody was working at a coal mine, like, they were physically taking coal because they had won the war and their side of the agreement wasn't being held up. And so they started taking stuff. And what happened was, over the course of like 8 months, the dollar, let's call it, in Weimar, Germany, went from being worth, you could buy a loaf of bread for 2 francs to you could buy a loaf of bread for 250 million francs. Mm-hmm. That's real.
They said they were like bringing wheelbarrows of money in to buy a loaf of bread. Or they'd like, I heard stories in that book about you'd go in to buy a coffee, and from the time you went to order your coffee to the time they brought you the coffee, it costs more money to buy the coffee. Yeah. Just in the time it took to
So is that because they printed so much more to try to pay back the debts?
No, it's because they didn't actually have any real goods and services coming out of the country. So again, you go to our...
Well, they did, but it couldn't be transacted in their currency.
That's where you go to our military. So our military now protects your local economy, right? So right now, we wouldn't have that problem. So say we had a bunch of debt and we had to repay all that debt and we couldn't, we can at least protect ourselves from people coming in.
You can't come get my oil.
Correct.
Yeah.
Yeah. And then what they actually did in Weimar is they created a new German franc.
Yeah.
So they reset their dollar system, their currency. Yeah. By printing it was like only 1 million francs or 100 million francs. It was a limited number of the new German franc, or what they called it, to try and reset and repeg their currency to something.
And they've done this in a lot of countries. Like, the currency gets to a certain point and they just reset it.
Yeah, and part of the reason we had Hitler come to power and then World War II is because Great Britain and France, all the other countries, wanted to penalize Germany so bad. And instead of trying to because debt is a partnership, right? Like, if someone can't pay your debt, guess what? You just lost the wealth of your debt. And so if you don't look at it as a partnership, you look at it as, I need to penalize you. That's not good for either party.
So in other words, they couldn't extract, or they were trying to extract their goods and services however they could to repay that. It got to a certain point and they're just like, screw it, we'll just go to war. And we'll reset became a nationalist
mindset. And then the other component of this is debt, right? So if one man's debt is another man's asset, all this is stacking of debt. You can go back to the Civil War, where the Rothschilds were in Germany, big family bank, building huge stacks of capital. JP Morgan comes over, starts funding our war. Then the U.S. government gets in trouble in the late 1800s, but we have all this gold. And so then JP Morgan wraps bonds around our gold, takes them back to Germany, sells them to the Rothschilds and all the other banking families. And so if you go the history of our large banks, huge banking families that stacked wealth by funding wars. And then JP took it another step in the early 1900s, where then he started financing, and not just financing, but partnering with the titans of industry. So he was in steel and transport and oil. And so now you're lending to it, you're lending to the government, you're now an owner of the largest industries. And then by 1907 and the early 1900s, when our economy starts to go down, JP Morgan has the most control of any human being in the world, because he can now prop up through an agreement with all the other bankers. We can add liquidity to the system. We can prop up our economy. We can make sure we don't have bank runs. And then that's ultimately what created the IRS and created the central bank. It's all debt driven.
I read something today that I think it was India just like sold 400 tons of gold to try to prop up their currency, and it like didn't work or something. Why? What's that all about? So there are most of the world's currencies backed by something like gold. So most currencies are fiat. Mm-hmm. They're only backed by, everybody says that's what it's worth.
Faith and trust in the United States government.
Well, in any government, anywhere you're at.
Yeah. And everything's just measured relative to the dollar. So like the dollar's strength doesn't matter to us as consumers unless we're trading globally outside of our borders. It's just relative to other currencies. So if we have a strong dollar compared to the euro, then great. Vacationing in Europe is cheaper for us.
Yeah.
But outside of something like that, it's not going to affect us.
So when you're looking at the dollar strong or the dollar's weak, that's only when you're going outside of the U.S. When you're looking at inflation, you're really looking at our local GDP in the United States up against the inflation metric to make sure we're producing enough goods and services to offset the inflation baked in.
It's purchasing power, but you can't just measure it in purchasing power. That's essentially what we try to do with the price index, is just say purchasing power is lower. But why are items more expensive, making purchasing power less? There's a supply and demand component to that. And so that's the argument for like tariffs, is we're trying to reset the trade imbalance and the supply and demand issues and manufacturing. And if you look at post-World War II, we created a new world order. America now took control of the reserve currency for the world, and it was a very globalistic pattern. And now you can just argue that we're forcing the hand of a new world order. So rather than just let economics play out through our military, we're saying this is how we're going to reset the new world order.
With what?
Through war. Starting with
taking over Venezuela.
Yeah, exactly. Yeah. And if you look at Venezuela and
I guess
Iran,
taking it over, freeing.
We just took their oil
Liberating.
over.
We took their oil.
We brought you some freedom.
But if you look at it from a strategic component, the majority of the oil that goes through the Strait of Hormuz and Iran's oil goes to China.
Yeah.
Mm-hmm. The majority of Venezuela's oil goes to China. So if our threat of a new world currency is BRICS, which is mostly backed by China, and we can now affect them by controlling certain aspects through war type movements, that's kind of how you do it.
So why does our gas go from $3 to $5 when Hormuz is closed down?
Because that's the supply and demand. Everything
is affected by it because of
and it's natural gas.
When you take out 1/5 of the supply, but
this is a weird conversation though, because we're a net exporter. The United States is a net exporter of oil. And so there's something funky in the supply chain that is going to correct at some point.
There's the type of oil, and there's
and so it's like, okay, and obviously refining it into the exact type of oil that you need is difficult. But why is literal gasoline, the stuff we put in our cars, like at that whatever ethanol, well, I don't know, why is that more expensive? Well, I don't know, because it's not more expensive in most places.
Well, is it because
like Texas, the gas in Texas right now is still $3. It's like sub 2.
But it was $1.50.
No, it hasn't gone up at all. No, it's the same as it was. It wasn't $1.50. It was like $2.89, and now it's like $3.10. Like it hasn't gone up.
So
that's what doesn't make sense to me, is because it's something funky in the supply chain. Specific, like we must be getting oil in Oregon from somewhere else. But we're not getting it from China though. So I don't have a clue why that specifically is happening, because it's not happening in Texas. I mean, the Panhandle of Texas has the largest oil reserve in the Americas. Like, there's not more oil anywhere other than underneath Texas. And so it's like, I don't know why oil has gone up for us. Part of me thinks it might be like, why is gas in, one of my buddies told me gas in Santa Barbara is $10 a gallon right now. Like $8 a gallon or something.
That's just taxes and
like, well, it was 6 and it went up 50%. Like, I don't know. Is that like some weird internal political thing? Like an internal U.S. I have no idea.
Oh, no. I think if you're an oil company and you got a lot of headlines that oil's getting more expensive, what do? You just make it more expensive. That's what suppliers do. They see how much you will pay.
Sure. So we should have bought oil instead of real estate.
But on the oil front, your margins are so slim that if somebody sees that they can capture everybody by just charging, like if there was a pump in Salem that was charging $4.75 for gas right now, we'd all know which one it was. Like,
you're talking
$4 for
everything's like $5 right now.
$4
at Fred Meyer's.
I'm saying some of it's like $6 though. What I'm saying is that if somebody like
the cheapest gas in town, we're all going to know,
because you're selling so many gallons of it that anybody who saw that everybody's price it, like you would just price gouge or whatever. What is it? Loss leader? I don't know.
Yeah, but
like you would cut your prices down.
Corporations don't stay the cheapest. They just don't. Like, if everyone else is raising their gas, you're not going to sit there and pump all your gas out and have a line all the way out the driveway and pump it all out. You're going to raise your rates to be competitive and have the normal trickle that you have out.
You're talking about like a micro supply and demand versus a macro supply and demand. We're trying to figure out what makes gas more, and market by market, it might be different. It also might be different supply and demand metrics for that market.
There's crude oil and there's Brent futures, and I mean, I don't know the logistics behind it, but you have the different indexes that you have as a different, like crude oil is oil that's not going to be used until like 6 more months down the road, versus Brent or whatever the fuck they call it.
Brent
is going to be consumed in the next 3 months. And so the price shocks of those various things will affect your future cost of supply. That's what it is this futures market, and it's bets being made based on turmoil.
I think just get an EV and then don't worry about it.
True.
Yeah,
then you're dealing with electricity.
Everything in this room has oil in it. You can't. It's
not just gas.
Oil.
Well, that's that's the crazy thing about all these small towns in like Asia right now. Like there's a ton of little countries, like, I mean, small towns being the size of Salem, where they're like, hey, you guys got to stop using power. Like we have like a month.
Like we have
like a month before we're out of all of it, and we don't have a path to getting. Like we don't have a path to just getting more. Like we don't have oil, and there's no way to get it right now, at least. Like, because the U.S. is not like barely a net exporter.
I heard that in Australia, like 13%, this is like last week sometime, they said 13% of all their gas stations were out of gas.
Really?
Yeah. Just like close the door. You can't even go get gas.
Yeah.
So obviously this whole...
Sounds like a problem.
This whole thing.
Yeah. Just
where you been, Trevor?
Yeah. Not in the same way, you guys.
Well, because the line you said was that all the gas all the oil that goes through the Strait of Hormuz is going to China. So the reverse, all of the oil that goes to China comes through the Strait of Hormuz. So there's oil that goes elsewhere that's going through there. But the biggest issue right now is that China doesn't have another place to get it. So it's not saying
they're taking it all from other places.
It's just like, where else are we? Like, we don't.
Also, one of the reasons they have the largest reserves of like actual stored oil,
because they know that the same thing with Japan.
They're sensitive to it.
I mean, correct me if I'm wrong. I'm not a historian on that, but I think that was part of the issue with Pearl Harbor. Was we were threatening to like stop giving them, or it was somebody was threatening to stop giving them oil. There was something going on, and their biggest thing was like, we're everything's going to shut down if we don't have oil. So they're like, all right, well, let's go for it then.
So how did the world work before oil?
Just not on electricity.
I mean, so you have to have oil to make electricity?
I mean, we power a lot of things with, the number of things that are powered by some form of oil is massive. Yeah.
Yeah. That's where the Industrial Revolution was so big, is because we changed from tribes to cities. And that's when the global economy was created, is when now debt was going across borders, national borders, and then you have productivity, goods and services now going across national borders.
I mean, they only invented the car like 120 years ago. We're talking about post World War II. It's only 80 years. Like, this is relatively recent history that we're talking about. Like, how did currency work prior to all this? Like, we just had a gold standard and we said your dollars and
different. Like for the longest time it was the Ottoman Empire, it was Persia, and then it was Europe, and then now it's America.
Well, and there were lots of different currencies.
Mm-hmm.
I mean, until 100 years ago, like, America had multiple currencies.
Mm-hmm. Rome was the world currency for a while.
This podcast was supposed to be for Chad, and he wanted us to talk about wealth.
So the question is, what would Hugo do? Hugo was the wealthiest man on the planet for 4 years.
Chavez?
Until he died. No. Hugo was the man in Weimar, Germany.
Hugo Boss,
who bought all of the businesses.
You're talking about
all of the
Stannis. His last name is Stannis.
Mm-hmm, yeah.
He was the wealthiest man in the world.
He bought all of the businesses.
He bought all the business.
He owned over 100 news publications.
Yeah. He bought all the factories. He realized, he saw what was happening with the dollar, and he was doing, like, instead of buying bread at a discount because he knew it was going to go up the next day, he was doing that with businesses and real estate, and because everybody was freaking out. And so he just accumulated all of the assets.
Leverage.
He already had a lot of money, but then he obviously was able to accumulate everything very quickly.
So that's one of the best things about real estate is the time value of money. We can borrow on our hard asset on the value of the dollar today and then pay it back when that dollar is worth
way less
down the road.
Yeah.
So it's not only a hedge against the inflation, but it's also, there's this effect where the property goes up because it takes more dollars to buy that property, and the money that we're paying our loans back with is not the same dollar that we borrowed it at.
Yeah.
It's magical.
Hugo got to play the real estate game for 100 lifetimes worth of inflation in 1 year.
I love it.
Because it went from, a dollar was worth $100 million was worth $1.
So whatever happened to him? I read
he
that
died in 1927.
I thought he lost a lot of his money before he died, though.
I don't think so.
He died with it all?
I think so, yeah.
Wow.
Yeah.
Good for Hugo.
So how much money do you think you need versus wealth? Like,
cost of living.
just enough to live on?
Yeah. It's just, what
you have to spend. Yeah, I think it depends. It's different for everybody because, like, we own buildings, we need reserves. We have businesses, you need to have working capital. We have lifestyles that we want to afford to have. But I mean, when you look at how much cash do you actually need, we were asking somebody on our podcast recently, on the family office guy, we were talking about how much do you allocate to cash.
Yeah.
And he's like, well, most people allocate 10 to 20%. We allocate 5 to 15%. So there's a good answer for you. Like, the average person probably has to allocate a lot more to cash because they need a safety net. They need to fund their lifestyle.
They don't have the wealth portion, so it's their lifestyle is a higher portion.
The other thing is
relative net worth.
If you just had real estate, so let's say you're a Paul Curley, you don't have any cash businesses, all you have is assets. Now, how do you generate the capital to have the reserves that you need to operate your assets? And the only way you can do that is to sell or refi. You only have two ways to get your
cash flow through.
Or you could cash flow. Right.
Yeah.
And so if you have a cash producing business like this family office guy is talking, he knows that he can fly a little closer to the sun because he knows that every month he's generating, or every day. He even talked about how much money they make every single day. And it's like, okay, normally I would need to keep 10 million in reserves just to make sure that I have that. And you go like, well, I can take that down to 5 million because I know I'm going to make another 5 million over the next 6 months, and I can replenish those reserves. So when you think about money as a currency and it flows in, if you know you have the money coming, it's a much different question than if you're Paul Curley and you're saying, well, I'm going to have to figure out when is it time to refi or sell something so that I can generate enough capital to go out and run my businesses. Cash and wealth.
What?
What's the definition of wealth?
Stored money.
But it's not money.
It's stored value.
Value on paper?
it's stored value that has a perceived value to it.
Well, I mean, it's weird having this, like, you have all this money that you can't touch or do anything with.
It's one of the reasons why real estate, in my opinion, is the best asset, because it's not easy to trade. Logan made the argument that if you could trade real estate, like we talk about tokenizing real estate, if we could trade real estate assets in a split second, the way people are trading Bitcoin, our real estate would drop in value significantly because we could trade back and forth. It's not easily liquidated.
Yeah, that's what I know. A handful of people that are all excited about tokenized real estate, it's so cheap to get in. Yeah, it's cheap to get in, and then once one of the other 100 people that are in will sell theirs for 50 cents on the dollar because it was cheap to get in, what happened to your value? It just got cut in half because one of the people wanted to sell.
It dilutes it when you can move in and out. In the stock market, you can get very emotional and you can buy a stock and then tomorrow change your mind and go, oh, oops, I shouldn't have bought that one, and go sell it and take a loss or do whatever you're going to do, or you make a little bit of money and you move on. With real estate, we buy a building and we go, oops, we probably shouldn't have bought that one. Oh, well, hang on for a couple years and then we'll deal with it later. You're forced almost to hold it and figure it out. We can't make those emotional plays. That's why I think that real estate's a great store of wealth, because it takes the emotionality out of it.
Absolutely.
Mike, you're supposed to teach us all these things. What is wealth?
That's why Bitcoin sucks.
Wealth is a store of value somewhere.
Mm-hmm. Right? Like, all you've done is you've earned money and you've traded that money for some type of stock, bond, asset, whatever, watch, mineral, and then you stored it there, and then it's just there. And then that changes in value over time as people's perception of it changes and the purchasing power erodes.
So most people go out and they work hard and they make this money that we're calling fake money, and then they blow it on stuff that is not an asset.
Because they want it to be real. It's real when it's in a bottle, and it's real when it's coming out your butt.
Because money doesn't do anything. Money comes out of your butt, Mike?
You poop it out, you eat it. And
you eat it. You eat it and poop it out.
Yeah.
So
you go out to dinner, a fancy dinner, and then you have a really expensive poo afterwards.
There is an argument to be made that money really doesn't do anything until you spend it.
What do you do with it?
It's just number.
No, money motivates you. Money motivates the majority of society.
So it might be cash sitting in a safe somewhere. It might be you pull up your bank account statement and you say, oh, there's a big number.
It might be a wage.
But until you do something with it, it's just a number.
No, it's
right?
a wage that gets you out of bed in the morning because you have a debt to offset that wage.
What?
Have you...
You have a debt to offset the wage?
Yeah,
What's
why do people go to work? They have upcoming expenses, rent every single month, gas, credit card bill.
Well, I got to live.
Car.
I got to have the money to live.
Yeah, so, right, but it's a wage to get us out of bed so we can go earn, so we can sleep in a bed. It's a motivator. Money is a motivator.
It keeps the world moving.
Have you gotten happier the more money you've had? And has your lifestyles increased?
No, I was happy with no money, and I'm still happy now. I don't think that money is... I think that I have said before on this podcast that money will solve 90% of your problems, and if you had 90% less problems, would you be happier? I mean, sure. It adds a level of security. It allows you to go live a better life. You have more freedom. I would say happiness is a weird dynamic, right? Because I think I think if you're not a happy person and you add more money to it, it's not going to make you happy. I think if you're already a happy person and you have more money, then sure, maybe it accentuates your happiness. But
what people won't say is when you are struggling, when you're living day to day, the value of no longer having to live day to day can significantly change your life.
Yeah, you're not as stressed.
Correct. But once you get to the point where you're no longer living day to day, it's really hard to incrementally measure that increase of wealth or that increase of income.
Yeah, I was reading about a guy on, he was posting something on Facebook. He goes, one thing he learned is, you put $2 or $3 million in a bank account and you can pretty much live like Jeff Bezos. Your lifestyle isn't really a whole lot. Maybe we're not buying a 500-foot yacht or something, but in the reality of what you can accomplish and do in your life, you have the same level of freedom, the same luxury. Like most of it is pretty, like the difference between your lifestyle with $3 million in the bank and $300 million in the bank is probably not terribly different, other than maybe you're not out buying an island, or it's power.
Yeah.
It's power, it's influence.
Yeah, layers of quality.
Well, I noticed as you start taking all the things for granted, and like you really enjoy them at first, and then it just becomes normal.
Sure.
And then you don't realize.
I've said that a million times before. Like, you just got a Hummer in the first day, and I'm not talking about that kind of Hummer. I'm talking about the car you drive. But you drive your Hummer for a couple of days, and after a while, you've just been driving your Hummer. Now you're just used to driving your Hummer. Do you remember? Like, do you drive it every day and go like, this is so much better than my Prius? Not until you go back and drive your Prius again, and then you be like, actually, this Prius is a piece of crap. You were totally happy with the Prius before.
With the Hummer, I do that. It is pretty cool. But with the other things that we have, no.
It's just the baseline.
I think the delay, though, too, and like the amount of time you spend, because I thought about getting a new vehicle for years, and I just like waited as long as I really felt like I wanted to. Honestly, until the point where I was like, my Corolla is going to fall apart, and I don't want to go to meetings with investors driving a Corolla that's falling apart. And that was like the threshold, but I had like wanted one for long enough that I think that when I got it, it took much longer for the joy to start like teetering off. Like it's like, I like driving a truck. It's nice. It's like way better than.
So now instead,
I don't know, dude. I just learned how to put the Hummer in launch mode, and dude, I didn't know it could go any faster. That thing's crazy. I gotta show you. I texted Gabe about it. Yeah. No, you haven't.
With Gabe's?
No, he hasn't done it either. I just learned about it. No,
I've never launched mine.
We did it one time.
No, dude.
No.
Did we really not?
Mm-mm.
Oh, yeah, I thought we had done it. You had to like You had to like park it and then hold it in the same spot for like 10 seconds.
Nope.
Oh.
It's crazy.
Never mind. We didn't do it.
But to your point, like you get a new iPhone every couple of years, right?
Yeah.
And like the first hour you have your iPhone, you're like, wow, this is cool. The screen's a little brighter. It moves a little faster. There's a couple little doodads on there. Mm-hmm. And literally after the next hour, you would never know you have a new iPhone. No. Unless you went back to your old iPhone and you're like, oh, this old iPhone sucks. So like Mike is saying, it sets a new baseline. That baseline, the joy of that wears off fairly quickly and you don't recognize it. It's like we went to Mexico a couple weeks ago, and I love my house and I love Oregon. But when I got back from Mexico, I loved my house in Oregon a lot better for a day or two, because I was like, wow, Mexico was fun, but I am so happy to be in Oregon right now and be in my house. It made me appreciate it, you know? So I think you just don't know what you have. We take a lot of things for granted. But to your point on cash versus wealth, like, should we be out building cash businesses or should we be creating wealth? I think the answer is both. Like, you need enough cash to run your life and run your business and run your buildings, but you don't need to stockpile $100 million worth of cash. I used to think when I got into real estate, that's what I was going to do. I'm not going to be a hoarder of anything. I'm not going to collect anything. I'm just going to collect as much cash as I possibly could. And then I met Paul Curley, and he's like, no, you don't want to collect as much cash as you possibly can. You want to collect as many buildings as you possibly can. Mm-hmm. And then I was like, but I want money too, so I need to collect businesses also, because I'm not okay operating. I like to have enough money in the bank to be able to sleep at night. That's important to me.
It's a good start. That gives you good contentment.
It does. And then you can make decisions out of peace and security rather than, oh my God, what am I going to do today? I got to write a check and I can't write the check. Mm-hmm. Although there is some fun in that too.
That'll get you moving. Your days go by quick.
You become a lot more complacent when you have too much cash. I will say that. Like, you see a guy, we had a client for a decade that wanted to buy a deal, and he's like, I got $30 million cash. I need to put it in a deal. And he felt the urgency that he needed to have it in a deal. And 10 years later, he still hadn't bought a deal. It's like, well, he ultimately decided he liked having $30 million in the bank. Okay.
Seems like it, yeah.
I mean, I would like that too, but you're like, I'm comfortable with this amount of money in the bank, and he's probably
at least go buy some fucking treasuries. Jesus.
Yeah.
Well, he probably had it parked somewhere that was paying him some. It wasn't just sitting in a checking account somewhere. I'm sure it was sitting in a money market account.
He was getting a couple percent. Yeah.
He was just beating inflation.
My biggest realization as we've accumulated more things and gone on more trips, is just like, it didn't change like happiness levels at all. Because I was having a bad day one time. I'm like, I almost have everything I could ever want. Why do I feel this way? And I was like, oh, weird.
Is he acknowledging emotions?
The robot. He's becoming sentient.
Trevor's transcending.
What happened to him?
Trevor's
Amazing.
Have you ever listened to Jim Carrey talk about wealth, the actor?
No.
Mm-hmm.
He says, I wish that everybody in the world could have all of the money and fame that they ever dreamed of so that they could realize that's not the answer.
Yeah, I think I have heard him say that.
It's like you get to a certain... And
interview.
the other thing you think about is like, okay, I become a billionaire and I'm a Jeff Bezos or I'm a Zuckerberg or one of these guys. You actually develop like a new responsibility to society. It's almost like people look at you. You're not just somebody who made a lot of money. Now you're responsible for solving the world's problems. It's like, well, there are people starving. There are people who are struggling with cancer or whatever, right? Mm-hmm. And it's like, now you're almost obligated to go out and help these people solve all of the world's problems because...
Or find a way to take more of their shit, one or the other.
Well, they probably do a little of both.
Absolutely, dude.
Like, I wrote a $1 billion check.
New ways for you to spend, not save, and not store wealth.
So why does Kiyosaki call savers losers?
Because he's a fucking...
Dude's a nerd.
Because he just wants to scare people.
He wrote a
Here's
good
the thing
book,
about Bitcoin. Bitcoin's current value is based on fear. Fear of overspending, fear of lack of control, fear of being taken from, fear of taxes, and the future speed of capital. That's what Bitcoin's value.
So are you betting with Bitcoin, you're betting against the US dollar?
Correct. Yes.
You're betting against all the dollars.
Correct. You're betting that
It's a medium of exchange. What is the best medium of exchange that is least likely to hyperinflate?
And that's why
the
Buffett
question.
says it doesn't have values because it's not used enough as a medium of exchange. But that is changing.
Yeah.
And changing significantly. And who can store their value in Bitcoin, like banks and eventually the American Treasury. And so then when you hear guys like Grant Cardone or even Larry Fink's a great example of BlackRock. They're all high on Bitcoin right now, but those same guys 5-10 years ago were fully against it. Why are they high on it now? They're high on it now because they've stored enough of their wealth in it that they need it to have demand, and you need to talk it up so that way your store of value retains its value.
So now they're talking it up. The other thing is too, I think, to look at is like 30 to 50%, I believe, don't quote me on this one, of all Bitcoin held is now held by governments. And
Iran has a ridiculous amount of their wealth in Bitcoin,
and that's one of the things they're talking about in this war is that they're funding these terrorist proxies or whatever with crypto. And so they know they can mine Bitcoin. They've got a money printer because they're paying like 0.01 of a penny of gigawatt power or whatever the terminology is. Their cost to produce a Bitcoin, like to us, it costs in America like $15,000. Mm-hmm. Over there, it costs like $2,000.
But that's the whole thing with Bitcoin is the closer you get to the 21 million coins, the less that matters. Because they're not producing anymore. So the cost to produce eventually will no longer matter because there is no more production.
Okay, I have a question about that. We're on a tangent, but I have a theory that once you can no longer print Bitcoin, the whole reason why you have all these servers up doing the blockchain is because they can make money. Once you've printed the last Bitcoin, what's going to keep all of those servers running because they can no longer make money? Like what is going to fund that? Because now you've got this huge electricity bill for the world to mine more Bitcoin, and there's no more Bitcoin to mine. What's going to keep those mines running?
You should ask Claude that.
Okay.
I have no clue.
Have you ever thought about this?
He was a Bitcoin miner.
Well, the purpose of the blockchain is twofold. And the first is, and what will become much more important later, but isn't right now and will make everything much cheaper. Also, those will all just convert to data centers, so that side of it doesn't matter. But
how do they make money
when you convert it to a data center?
Yeah, like how
because you put it on $1 trillion lease with Apple. Like, I mean, you just put or whatever $1 billion lease with Apple. If you have all of the data centers in some country that were used to mine Bitcoin, and then now because essentially it's just compute. Like, what is your compute of a country? And so, like, how much? What is the simplest way to put this? how much computing power do you have? So when you say like my iPhone is faster, like the countries that can mine Bitcoin the fastest will at some point just convert that into the thing that AI is used for, which is like a token. So right now it's like, oh, it's really expensive and like really bad for the environment for Claude to run or whatever it is to run. And like OpenAI is putting $1 billion into all these data centers so that they can have more compute. And so then all of those the current things that are mining Bitcoin will just convert over to data centers because it's all compute. It's the same thing. You just essentially just have to put it on a different software, and there's probably some differences in hardware depending on the data center. But the other piece of it is that right now Bitcoin isn't used frequently for a medium of exchange, but at some point in the future, when think of it like PayPal, and
when
so
it becomes a POS,
all of those data centers go from because it's a third party validation that this contract that was just executed, and the contract is literally at some point going to be like buying a Snickers. So then there's third party validation that says this is the wallet that it came from, this is the wallet that it goes to, but none of these people validate the entire thing. And it's not a person doing it. And so all of these, call it computers, are just saying, yes, this transaction is approved, this is proper, this is the right amount. And the more people that are doing it, well, one, they make money off of it. So there's some sort of rake.
Just like credit card service fee.
It's a 3% service fee. It's a service charge because we process this for you.
So how do you break that up from data center to data center? Because isn't blockchain like every single computer on the blockchain?
The same way that you would think of like a mining conglomerate. And so like when you have a set of miners, you can mine in part of a group, a pool, you can pool it together. And so then when one like computer would technically be the one that got the Bitcoin, like it would go to one wallet, but it's really like a middleman, and it gets broken down to everybody else. And so when you say that you want to execute a contract, then a group of computers, let's call it, can come together and say, yep, we're good, we'll help you with it, and then it validates it. And so whoever's running that like software program is going to be the one that makes some sort of rake on it. And so it's not like you're making a ton of money on one transaction, but when everything in the world is transacting on that, I mean, that's the hedge.
So the bet is that we're going to use this as a POS system.
That's been the bet for 15 years, right?
But we're nowhere close to that today.
Maybe.
So is Bitcoin?
I mean, I'm not absurdly confident that the apartments that we own are still going to be worth the value of the building and the value of the bed that is inside of them that has a head sleeping on it. And I'm bullish on the fact that whoever is sleeping on that bed will find a way to pay me rent at some point, whether or not it's in US dollars. I'm bullish on that. I'm not bullish on the fact that the US dollar is going to maintain its value for the next 10 years even. I'm not at all. In fact, I don't think that it can mathematically. I don't think that the rate at which our debt is increasing relative to the payoffs that are coming, like right now, we're about to have to start offering higher interest rates, but our economy isn't in the spot that it needs to be yet to be able to offer higher interest rates for people to purchase our debt. And Mike talks about this all the time, but it's like we're about to be in what the older folks would call a rock and a hard place where we don't have a good option. It's like, okay, so our debt is increasing by a larger amount than our annual GDP. How do you start to pay it down? If I owned a building that the debt had to increase over time, that my debt on the building that I owned was increasing over time at a faster rate than the fixed rate at which it's like, well, no, that would just mean that, because if it's productivity, that would just mean that I need to change the medium of exchange, which means that the United States has to figure out a way to pay its debt back in not US dollars.
Yeah.
Yeah.
They have to change the currency.
Because we can't do it. I mean, it's like, and everybody's like, well, but you know, the dollar amount has increased. Yeah, but 15 years ago, our debt payments were 40% of GDP. Now they're 120%. Okay, maybe it doesn't happen next year. Maybe it doesn't happen in 2 years. But what happens when our debt payments are 500% of GDP. Well, that's impossible. Why? 15 years ago, it was a quarter of what it is now. Why won't it be 4 times what it is right now?
The argument that would be made is the U.S. dollar remains the world reserve currency, and we're able to maintain the petrodollar and move resources around the world in the dollar, that the U.S. government can continue to do the things they've been doing in the past. But if that does not happen, we have to come up with a whole new currency system, essentially.
Yeah, certainly. And it's not, I think that it's really, really hard to even grasp that could possibly happen. But if you try to look at it just from like a pretty, like a simple mathematic perspective of just like, okay, here's how much money we create every year. Here's how much value we create every year. This is what we're trading that value in. We don't create enough value for the value that we owe the world. We owe the world more value than we create, and that number's going up. So we owe the world 1.5 whatever, or we owe the world X number of trillions.
That's why we got to blow the world
up. And our
up.
GDP is
show them that we control the world.
So that's why I keep coming back to this World War III conversation, because I feel like if I had the world's most powerful military,
that's why we have it.
The end game is to force all the other countries to buy a significant portion of our debt and hold it to maturity.
That is one of the end games, because right now the part of the issue is that countries are moving away from buying our debt.
Don't we need to control the resources? This is why we go into Venezuela. This is why we go into Iran. This is why we try to control Greenland, is because we're going to use our military might to control the world's resources. So we're not so much worried about the U.S. GDP. We become now responsible for global GDP.
We want to be in control of global resources so that when the dollar isn't worth anything anymore, we still have to be the one that you go to. I still want to be the merchant.
We can still
whether or not you and I are still trading in dollars, I still want to be the merchant. And so it's the game we're playing with apartments, but that we're Trump, I assume, I can't imagine why else he would be doing the things that he's doing, is trying to play it at the global level.
You can
he's realizing that his buildings were sweet, really worked out. Now he's trying to do that at the global level. How do I take control of the assets? And the assets right now are, I don't know, maybe an entire country's oil supply, with the largest oil supply and a lot of other natural resources that the other countries, I mean, Venezuela's huge and abundant in natural resources. It's like, well, that would probably be a pretty good idea to have control. That's a building that I want. That's a nice value add apartment complex. What if I kicked out the current manager on that apartment complex? It actually might be helpful if I did that. And then the people that lived in that apartment complex might come to me when it was time to, it's like, okay, yeah, maybe that's the idea. Like, I can't see the picture. The only picture I can see is that the dollar's not in a spot where we can just keep it from inflating and also keep our economy productive. We spent too much and it felt too good for too long. It has to hurt really bad. Whether or not we stay on the dollar, I don't know, but it's going to hurt really bad pretty soon.
So we should get rid of all our dollars and buy more.
That's the whole thing. Yeah.
Buildings and Bitcoin. So, Mike, go back to Hitler for a second. So,
and Mike,
you said
my boy Hitler over here.
Can you
you said something interesting when you said all wars are financial wars. So, when Hitler was trying to do whatever Hitler did, you're saying he was doing that for financial reasons? It wasn't.
No. The most wealth is made lending to wars.
Oh. Okay.
Yeah, I think he actually might have just been a pretty bad guy.
Yeah, no, he was just the face of.
I don't know that he was extremely money motivated.
But isn't that what caused World War II? Is we were trying to stop Hitler from taking over the world?
Yeah, think of it. So, the pain after World War I. Now you have a new populist human being that takes over power from the voting class that would not have had that power or that voice had they not gone through World War I. So the pain of post-World War I propped up a human being that may not have had that power. And I mean, he was the Time Man of the Year before World War II, right? So there was this voice coming out in a nationalist movement that then just got more and more carried away.
So have you guys seen, just really quick, you have a much better comment than I do, I promise, but I still would like to make it. Have you seen the videos of him talking in but translated to English now, like the AI videos but it's like the actual speech that he made translated from German to English?
I haven't seen him.
whoa.
I would imagine they're impressive because he was like the greatest salesman of all time, wasn't he?
I'm going to be honest with you. Prior to that, I was like, I can't even, like, I get it. Obviously, a lot of people who weren't crazy ended up following him for whatever reason. You listen to one of those speeches,
He bought in.
I mean, you're ready to run onto the football field. That guy
He was a hype guy.
That guy was good. If you went to lunch with Hitler, you were leaving doing whatever he wanted you to do, for sure.
Awesome.
Like,
I'm listening to
I'm
a
not
book
saying
on Charles
I would,
Manson. That's a good
because I
one.
have the hindsight.
Same thing.
But yeah, obviously hindsight's 20/20. I obviously would not. However, back then, I mean,
You could see when everybody goes, why'd they all follow him into battle and do this? You're going like, oh, listen to one of the speeches. You can see
Yeah.
why they did it.
Yeah, and the easiest way to rally a person is if they hate someone else.
So in future wars, which we're in one now, but we don't call it a war, it's supposedly a military operation. To me, I was always taught to follow the money, like figure out where is the money moving and what is happening. And it feels like we're trying to control. I mean, it feels like the war or whatever it is that we're doing right now is very much about money. It's not so much about, we call it a religious war, we call it terrorism, we call
All
it,
that stuff's true,
they
yeah.
can't have nuclear capability. All that stuff sort of feeds into it. But at the end of the day, it's like, well, we could wipe out this terrorist regime and at the same time take over one of the world's largest supplies of oil and keep moving the petrodollar and keep moving the resources the way they want. I just feel like we're being told a couple of the bullet points that gets the general populace excited about, like, okay, fine, let's go bomb them because we don't want them to have a nuclear weapon. But like, I don't know that that's the ultimate goal of what they're trying to accomplish in the Middle East right now. I think that they're trying to
It's
control
all of that. It's everything.
It's to control resources.
Sure, but religion, politics, and war are all the exact same thing.
But I think the religion and politics part of it is for us. I think behind the curtain is what I'm sensing is that there's a bigger,
the biggest
there's
puppets.
there's a bigger design that's happening behind the scene.
You missed the bull versus bear debate. My best slide was a politician with puppet strings above it, and the bankers are the puppet strings, and the politicians are the.
So
puppets.
clearly, even though the general public, I think the majority of Americans are not behind this war, but clearly the bankers are, or it wouldn't be happening.
$200 billion package.
I think that's a small number. I think there's a lot more zeros after this.
That's just the first one.
package.
At
That's just delivery one.
At $1 billion to $2 billion.
I think we're talking about trillions of dollars.
Well, at $1 billion to $2 billion per day being spent on it, and at $200 billion, either we've got 100 to 200 days left of war, and then another infrastructure package after it. Or if you believe Trump, it's going to be over in 2 to 3 weeks, and then you have the remainder of that $200 billion as a spending package. But you don't send the Marines, you don't send the 82nd Airborne, you don't bomb all their infrastructure if you don't plan on rebuilding it.
I think he wants to take over Iran. I mean, he talked about
he'll do anything that makes him feel good that morning.
I think he's a lot smarter than some people give him credit for.
I think you got to give him more credit than that.
I think
You can hate the guy,
I don't
but
hate
you
the guy.
can't
I
argue
think
that he's not.
when you look
pretty
at the
good
kind
playing the
of
game.
when you talk about the deals that Trump has
you
put
can
together,
definitely argue that he's
like,
made a lot of mistakes.
you were talking
Yeah,
about you were
certainly.
not to compare him to Hitler, but you were talking about like the greatest hype guy of all time.
yeah,
I'm just saying, like, I've read The Art of the Deal. I've looked at what Trump has done. Even if half of it is true, like, this guy is the greatest deal maker in our lifetime, and he's out there trying to reposition the global stage. And there's clearly something more going on than just, oh, we want to get rid of a terrorist regime, or we want to stop them from having nuclear weapons. Like, there's something else happening here, and it's definitely has to do with the movement of resources and having control over some other economy besides our own. Is my
it's just the religion is the aspect of you control a lot of people through religion, so you can rally a lot of people.
Oh, that's the Hitler part of it. Like,
Yeah.
oh, we can get everybody riled up over this because we can have a religious war. But when you really look at it, I don't think Trump
But
is a
name a
highly
war-
religious guy.
Name a war that didn't have religion involved in it.
Oh, I get that. But I think that what I'm getting at is I think that's for us. I think that they're telling the general public to let's hate each other over religion or politics. That's the divide and conquer strategy. It's like, this is what we push out to the people so that they get behind it and they pass the $200 billion package or whatever, right? But the reality behind the scenes is whatever the bankers are trying to accomplish here, they're trying to reposition the way the global economy works. And to me, you're taking the world's largest economy, the world's most powerful military, and suddenly we're kidnapping presidents out of other countries. We're talking about taking over Greenland. We're going into the Middle East. We're doing all these things. And I don't know. I don't think it has anything to do with religion or politics, but that's just me.
All right, Chad.
I agree with you. That's all about money. We're using the economy while we can.
Chad, you're too rich. You got to take all your money because it's going to be worth nothing next year and buy some buildings.
He buys gold and buildings.
Yeah, Chad has
doing a good
lot
job.
of hard assets.
Oh, and you know what he does?
Chad has more hard assets than you do.
The other thing is when it all comes down to it, this is what my dad
Do you
taught
count
me.
buildings as hard assets?
Buildings? Yeah.
When you get to the end,
his ownership portion, Chad owns 100% of his buildings.
and he owns a lot of guns and ammo. So when you get to the end, he with the most guns and ammo wins.
That's really what it is.
He with the most drones appears to be the one winning.
And this is why
an event that requires that.
And this is why Trump wants a $1.5 trillion military budget, because he knows whoever's got the most missiles is going to win the money war. Like you got to have the guns and you got to have the bullets. And when you're dealing with countries, you're talking about drones, ballistic missiles, nuclear weapons. You have control, and you can take control of the resources. This is the craziest podcast we've ever done.
I got to go fishing, so we got to do the next episode.
Yeah, we got to do the next episode another day.
I would highly recommend you do not eat the fish that come out of the Willamette.
That's what everyone keeps saying. It's clean.
And then if you're not going to eat it, why you got to fuck up their mouths with hooks?
Are you throwing them back, or are you eating them?
I'm gently.
He just takes a little bite out of them and then tosses them.
He doesn't know how to pull because he.
You just bite the fins off and throw it back
does
in.
catch, bite, release.
All right, peace out.
Oh, Mike's leaving. He's done
ready
with
to
us.
go. I can't handle it anymore.
All right, Deal Junkies. Hey, please share us with someone you love. We love you guys, and we'll see you next time.